Ansuman Deb, Aviation Research at ICICI Securities, is with us on the show. So, you've written out a detailed report. I want to understand how the future for aviation looks. What really would be the growth prospects, given that this was a sector that was once completely written off due to the high debt burden and a lot of fundamental concerns?
Yes, so basically, obviously, over the last 1 year, we have had a very significant change in the aviation industry. We have a very strong domestic growth, northwards of 20%, as well as we have a benign cost structure, which has largely because of lower crude prices as well as now currency being appreciating. But having said that, going ahead, the outlook for the sector as far as traffic growth is concerned would be high and continue on the pattern that we have seen over the last 1 year. That's because of the capacity addition plan that the domestic carriers have. But the key thing for the companies would be how much the fare hikes or how does the yield behave, which has been a dampener in the last 1 year. So how does it behave in reaction to the positives of a lower cost is the key thing to measure actually. So how much of this lower crude price and the benefits due to currency the companies choose to pass on is the key monitorable.
Do you think that the sector, Anshuman, right now, and you would look at the screen and be like, wow, these aviation stocks are really flying high, is really being driven by all that talk about more M&A activity coming in, the sector being opened up for foreign investment, more so than, for also foreign being allowed to set up shop in India? Not just tie-ups, but essentially allowing a lot of foreign carriers to base ground here.
So basically, this is a normal economic cycle, I think, where you have, because of the increasing profits and increase in the attractiveness of the sector, we have a lot of activities, both from the FDI sense of it, with foreign airlines expressing their interest to foray into the Indian aviation sector. But having said that, that will not be a wow factor, because that one, in the sense that would lead to an increase in competition. So how the government tries to balance between the effective clauses that we have for Indian Airlines and the 100% FDI is a key thing to watch ahead. So the main concern would remain in the sense of the earnings growth because of fares. Now, considering the attractiveness of the sector, one can definitely say that the risks to the sector looks a lot less now, because the costs looks much more benign. Than outlook on costs is actually much better, and we have a fair degree of comfort as far as cost is concerned. But the attractiveness from the stocks after being run up so much will depend on how the companies choose to pass on these benefits in terms of lower fares in Q1 FY17, which in a seasonal nature of is a very strong quarter for the aviation space.
Understand that even the currency factor plays a big role, given the way the rupee has been steadily appreciating versus the US dollar. How much really of a game changer would this mean financially for these companies?
Yeah, so basically that's a very big cost tailwind to in the sense that more than 50% of the cost is dollar denominated. So basically, when you have 50% of 50% of the cost being affected favorably, that's a very big factor. But traditionally, we have seen in this sector is that the biggest problem is that it's a very highly competitive sector, where fares kind of tend to move down with lower costs and increase with higher costs. But having said that, since we have already witnessed a series of fare declines over the last 2-3 years, the tendency to pass on these fares would be low. So some kind of value accretion to the airlines looks more realistic now from an FY18 perspective. So that's where the sector looks good. But as I said, a lot will depend on how this competition actually pans out in Q1 FY18, because Q4 FY17 we know that crude was high. So there are a lot of cost pressures would be there in this Q4 FY17 quarter. But in Q1 FY18, you would have a juxtaposition of lower cost and a high seasonal demand. So how the airlines behave to that in terms of their pricing will be the key thing to watch.
Right, and you know, this is a very interesting report because you also analyze traffic trends, passenger traffic trends essentially,
Right.
and correlate that to what revenue airlines can generate per passenger, which is essentially in terms of fares. You know, just highlight what kind of mode are we heading towards where you expect traffic trends to pick up, and in response to traffic trends picking up, do you see fares being compromised? Because as per your report, I get a sense that it's better to have lower traffic but higher fares because it results in higher return or higher yields for airline companies. So that actually works better than having a lot of traffic, more volumes in terms of passengers and lower fares.
Yeah, so basically I believe that we over the last 4 quarters we have seen that the fares have been going down and the traffic has remained northwards of 20%, 25% in some months, and it's been pretty much between 20 to 25%. So now the elasticity of lower fares bringing up more traffic, I think it is in a point where the airlines are better off not passing those fares and maybe premiumizing the traffic flow, so that would be margin accretive from this point, because we have already witnessed a 22% kind of a growth of traffic for the last 1 year. So even if the airlines choose to increase their fares and compromise little bit on the traffic, this would be a value accretive thing for the sector. That's my belief. But having said that, that dynamics changes with the lower cost right now. So right now I would expect that the fares would not increase, but even if it stays flat in the wake of this lower cost, this would be highly value accretive for the airline companies. But having said that, in the past we have witnessed severe pricing pressure in the sense that airlines have reached out for higher PLFs, higher passenger numbers, and sacrificing maybe a lot of yields, which needs to be seen whether that trend continues or we can have some better margin.